Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is at current 5:51 in the a.m. Eastern Standard Time on September the 6th. Let's begin with some member stock chart requests. Then we're going to segue over into the pre-market activity like we normally do. But first, if I could ask you to please subscribe to my channel. If you watch this on YouTube, Facebook, Twitter, etc., give me a like, and at the end, if you leave a comment, that would be great, and I will certainly get back to you. All right, let's get to member stock chart request. First up, Dover Downs Gaming and Entertainment weekly chart. Nice consolidation here. We became overbought on this gap higher. A multi-week consolidation. That gap up was on massive volume, beautiful volume. And you can see that the pullback has been on sequentially declining down volume, which is good. Now, I will caution here that on weekly ADX, we are at current at 69.13 on the black signal line. Now, usually a reading above 60, 65 is an indicator of a trend that is unsustainable and poised for a potential reversal. Does that mean that the shares cannot break out? No. Can the signal line pull back and then drift up higher again? Yes. So by no stretch of the imagination does it mean that simply because one indicator is signaling quote unquote an overbought condition, and I'm using that term loosely, does that mean that you should sell your shares and not enter the trade? It's just an indicator to imply that, you know what, let's keep an eye on this. If it breaks down, well, we have a reason to believe that the breakdown is warranted as indicated by the ADX, but we don't want to get ahead of the signal flashing on the ADX. Let's wait for the price action to play catch up. And when I mean price action, do we break support? And as it stands right now, we're off the lows of the week. We're holding support. I see no reason right now to go selling shares. Would I go buying them? If you're going to put a stop loss in, say, just below the support level here at, I would keep it loose, 2.99 per share. Sure, I'd be fine with that. Good till cancel. And then add more on the breakout. Stokes is still looking strong. RSI looks good. MACD histogram declining a bit, but that can always recover, just like it did back here and back here. Daily chart. The RSI obviously trending down, but we're in a sideways consolidation, and that's expected. Now, what concerns me here are the Stokes really weak, and they appear to be getting weaker. So if there's one indicator here on the daily chart anyway that concerns me are the Stokes. I would really like to see a hook up. And if you're going to enter this trade, keep a tight stop loss order, because if we break support, we could head down pretty quickly here. But otherwise, I think the shares are simply consolidating gains, and that the path of least resistance remains to the upside until, of course, they do not, right? We don't have crystal balls here. We're looking at charts. We are not fortune tellers. So let the markets dictate which way the shares are going to go. If they break down, well then, accept a small loss, move to the sidelines. If they break out, build on your position. Next chart up. AV Genomic Medicine. Okay, GNMX we'll call it. I'm using a weekly chart here because there's all sorts of technical damage here, and the daily chart simply does not do us justice. Far too noisy, and one could argue that the weekly chart is far too noisy. So we'll begin with the weekly chart, then we'll talk about the monthly chart. Could we have a double bottom setup here, and in fact, an undercut double bottom setup? Sure. We're midway into the trading range with the blue line marking the upper band of resistance and the line in green acting as the lower band of support. Would I be a buyer here? No. We have a lot of overhead supply here. I think there's too much risk versus reward. We have the 20-period moving average, which is acting as a declining ceiling. We're trying to punch through there. I would like to see a pullback, a flattening of the 20-period moving average, and then a higher low on price. And then once we begin to put in higher highs, and then we break out above this upper band of resistance, then I'll become more optimistic, because then we're clearing resistance levels, which are acting as declining ceilings. We're moving through them, and we're moving through prior buyers who are exiting the shares. We're moving through that resistance as well. And then we can begin to focus on these buyers back here looking to get made whole. So a lot of technical damage that's been done here. I see no reason whatsoever to get excited all too quickly. Now, monthly chart, let's throw some lines up here because the story begins to change a bit longer term. All right, so on a monthly basis, a far cleaner view, right? So we have a W formation potentially forming. The moving averages are very similar to of what we've seen on the weekly chart. They are declining and acting as a declining ceiling. But when you take a look at your momentum indicators, RSI hooking up and threatening a breakout. A nice inverted head and shoulder setup, left shoulder, head, right shoulder. If you want to call it a cup or saucer with handle formation, you could do that. Either way, it's looking pretty good, but we don't have a serious breakout yet. Same story here on Stokes. We have higher lows getting put in, no breakout yet. So what I would like to see here is a pullback and a retest of support, depending upon the potential for a short squeeze. I'm not sure what the short interest is, but if we have a large short interest, if we make a new weekly high, then, and if we put in a new weekly high this week, that's a new monthly high as well. All right, so really a new monthly high. If we put in a new monthly high next week, then you could look to open up a trade, but just have an exit strategy. So technically a lot of damage here. Not one that I would really trade. Too much overhead supply. And if you're looking at it on a daily view, you can see a ton of overhead supply up here, making it very, very difficult to get through. And to do that, you need volume to overwhelm sellers, and we don't have it. We're consolidating right now. If we get a breakout above 129 on volume, you know, that could be a signal. But again, remember you have a lot of overhead supply here. You never know when you're going to get a big seller that's going to move in and take the shares off the highs. So you want to keep your stop loose, but not too loose. If we break down below the lows of August the 28th, which is prior support, 1.14 would probably be a good stop point. Put it a penny or so below there. And that happens to coincide with the pivot point seen in July, where we sold off, rallied, pulled back, higher low. 1.12 was the pivot point. So if you wanted to use 1.11 as your stop, there's an option as well. But I would not get overly weighted right now. Again, far too much overhead supply. It's concerning. A lot of technical damage has been done here. ZGNX, daily chart. You can see that we became overbought several weeks ago. We've had a serious pullback, but we found support at 45.30. We're attempting to break out. Now, a lesson learned here is that what was the prior lower band of support will now act, at least in the short to intermediate term, as the upper band of resistance. As you saw yesterday, we rallied up and through this resistance level here, and what was prior support is now acting as resistance. You also saw it here. You saw it here. So keep this chart in mind when you're looking to buy these shares. Now, can you go buying them? No, not yet. What you want to see is at a bare minimum, a close above 48.50 per share. And what I will warn here is that on the 4th, we broke out, and yesterday we had a breakout point failure or a bear trap. Very bearish stuff. So wait. It doesn't necessarily mean that we're going to go lower here, but there's a good chance. So wait for a close above 48.50. Use a stop right below this lower band of support, because if it breaks down yet again back into this trading range, I wouldn't want to be a part of it. Now, Stokes are rising. Looking good. Both lines on Stokes above the 50 level, looking good. All right, I want to talk about the FANG stocks for a moment, as well as Nike. I have been putting out commentary with regard to Web 2.0 stocks. Take a look at my videos. If you want to take a look at them, I'll link to them as best I can. I did a couple of them at the end of this video. I have been warning since earnings season for last quarter that the FANG names were taking a knife and putting it to their own throats. And a lot of people took it as political, and sure, I guess you could be taken as political, but I didn't add the politics. These companies are becoming far too left-wing, and they're letting it impact their businesses. Netflix investing in far left-wing shows. They paid out Chelsea Handler millions. Her show's canceled. And I warned that we would probably get a rally on Netflix after earnings, and that would be the opportunity to open up a short position on a lower high. We are very close to pulling the trigger on our short trade of Netflix. We predicted there would be a counter trend rally. We got it. Quite possibly we could have a lower high here. Daily chart. Again, lower high. A big breakdown yesterday, trading down 6%, more than 6% on the day. All the indicators ugly. Google, if we close out the week, and I warned about this yesterday morning on Swing Trading Today, and I warned about it a couple of weeks ago as well. If you see a close down below 1204 on Google, that would be a confirmation breakdown. And we closed yesterday out at 1199.10. The week is not over yet. So I'm not ready to claim victory here and say I predicted it. However, if we close out the week at 1204 and we make a new weekly low, it's probably all game on for Google to the short side. Fund managers do not want to own a company or be overweight a company. I shouldn't say wouldn't want to own. They wouldn't want to be overweight a company who is being slammed on Twitter by the President of the United States for manipulating their algorithms. I'm not saying they're doing it. I don't know. I'm not that smart. P.S. I love YouTube as a partner, and I hope there is no antitrust action. But folks, please, if you're doing anything, straighten out your algorithms. Avoid what could be quite the mess moving forward. So Google under quite a bit of pressure here. And you can see that MACD histogram really losing momentum now. Google is not looking good. Amazon, who is also in the crosshairs of the President of the United States, therefore the Department of Justice, is still doing well. I predicted a couple of weeks ago that the shares would hit $2,000 per share when they were at $1,800. How did I know that they would hit that price target? It's simple. Traders are OCD. They needed to touch the number. It's a big, fat, round number. It's like a barracuda to a diamond jig. You see it time and time again. Sure enough, we tagged it. Now, what's next? So, on a weekly basis, we're down a little over 0.75 of a percentage point. But when you take a look at the ultimate oscillator, we're putting in lower highs despite the fact we're putting in higher highs. Now, on a daily chart, Amazon broke support yesterday. Now, you could argue, Bob was pretty extended, was leaning into the third standard deviation Bollinger Band. It was due for a pullback. We're a bit overbought. Fine, I accept that. But again, this is a company that owns the Washington Post, and they use it to bash the President of the United States and therefore the Department of Justice over the head constantly. Why are you doing it? You're trying to control the narrative in Washington. You're trying to avoid antitrust action. All you're doing is drawing attention to yourself. Facebook, for a smart guy, Zuckerberg is about as dumb as they come. I find it hard to believe that he is allowing such drastic changes to his algorithms. I'll give you a case in point. I tried to run an ad. I don't do much advertising. But I did do a video a couple of weeks ago, and I included a clip from CNBC. Certainly not a right-wing publication by any stretch of the imagination. So I included the clip, which was copyright protected, so I had the right to use it. It was public information. And Facebook rejected it. And I never bothered going back to run another ad. It was just a turnoff. It's like, why am I wasting my time here trying to get a message out using editorial from respected news sources, yet you can't punch your message through? And that's what they're doing. They're ticking people off. So I can't wait to see what happens to their advertising revenue this coming quarter. And it need not decline. All it need do is slow down. And that will send the shares tumbling. And don't forget, they hired, 10,000? At least that was the promoted number out of Zuckerberg. They were going to hire 10,000 more censors to censor content. Just what you need. Some kid out of college telling you what you can and cannot say. So it's frustrating. It's irritating. And really, in the end, other than photographs and sharing with friends, do you really need Facebook? They consider themselves to be far too important. They can be replaced by the marketplace in a heartbeat. Remember, there was once a MySpace. It's still around, but I couldn't tell you what my user ID and password are anymore. Twitter, another basket case, lower highs. And again, folks, I am not a Harvard graduate by hardly any stretch of the imagination. Do I have that type of aptitude? But you could have seen this coming a long time ago with all of these stocks, and I have been warning about it. It's not political. I'm not injecting politics. These are companies that have injected politics into their business practices, and these are companies that will suffer because of it. And you can see it reflected in their share price. And I warned, I believe it was either last week or the week prior, I drew this blue line here. And I warned that I believed that this was a dead cat bounce and that I expected a rollover on Stokes and a good chance that we broke down because this was a dead cat bounce. So we haven't broken support yet, but if we break 31.07 and close there on a weekly basis, say hello to the 20s because that's where we're going. And I'll probably get a lot of dislikes regarding my commentary about the FANG names. I'm just telling you what the charts are saying. And what's the driving force behind it? Look no further than the companies themselves. This is corporate mismanagement, corporate malpractice at its best. Take a look at Nike. This is a stock that was doing really well. And no stranger to, in decades past, entering the political fray. However, the country was nowhere near as polarized as it is right now. And were you sitting in the boardrooms of these companies, and in this case here, Nike, if you're sitting in the boardroom of Nike and you're contemplating giving Colin Kaepernick, whether or not you like him, you don't like him, that's for you to decide. I'm not even going to render my comments here about him. But the marketplace is what matters. So what I would ask is, okay, well, you've had the NFL and ESPN embrace the Colin Kaepernicks of the world, the kneeling down. How has that treated their businesses? Has the NFL seen an increase in viewership or a decline? We know that story, a huge decline. ESPN, horrible ratings. So they have not benefited. So what's the very definition of insanity? It's doing the same thing over and over again and expecting a different outcome. So when you take a look at the data, which would suggest that taking the side of those who would kneel for the national anthem, it's probably not the best for business. And now when you take a look at the share price of Nike, which broke out back in May, you can see that we've now broken down below the lower band of support. Who needs this stuff if you're long of the shares? Who needs this stuff? You can see that we've broken down on RSI. We tried to retag support. We tried to recapture it and failed. Same deal here on price. Now today we're going to wake up. Actually, we already closed out the day yesterday with both lines on Stokes down below the 50 level, losing momentum. We're probably going to break here. I'll be looking to short Nike. Big volume on Tuesday. And you may be saying, Bob, look at yesterday's volume as well. Big up volume. What do you have to say about that? Well, we closed off the highs of the day, and it would be right to argue we closed off the lows of the day. Let's take a quick look at, she's a 1 hour chart. All right. So we have higher lows on RSI. Remember, this is not 1 hour chart here, very volatile. The Stokes look good, I have to say that. However, what I would be looking for here is simple. For all I know, Nike could go to $200 per share because the American public loves ridiculous controversy when they buy their sneakers and their athletic gear. All I care about is one chart. It's this one here, the 1 hour chart. Do we break down below this lower band of support or do we break out? Does the 50-period moving average begin to take out the 200-period moving average, or do the shares rally and recapture the 50-period moving average? That's all I care about. And if the answer is we're going to break support and move down to new weekly lows, guess which direction I'm trading Nike? Because the narrative and the story are on my side. Now, if we break out, well then, apparently the Colin Kaepernick deal is not a great big deal. Until, of course, we see their earnings guidance for next quarter. Weekly chart, RSI has broken down. We haven't closed out the week yet, but we have 2 trading days left to go. We are breaking down. Lower highs on Stokes. We have not broken support yet, but we are closing in on this lower band of support. Very extended on stochastics. Let's segue into the pre-market activity. All right, the S&P 500 pre-market, we managed to rally this morning off the lows. We were weaker. We have now recovered some territory with a bullish key reversal last 4 hour bar. These are all 4 hour charts. We're now pulling back. We're probably going to retest this red line here to see if it'll hold the support. We're up 2 points this morning. We are trending downward on RSI. The NASDAQ, very similar price action as to what we're seeing on the S&P 500. We had a bullish key reversal bar, last 4 hour bar. We're now pulling back a bit. This bar opened up an hour and 22 minutes ago. Lower highs, lower lows on RSI. The dollar is down slightly. Quite the bearish day yesterday. We're seeing some topping action here. A little bit of a struggle to get through the rising 20-period moving average on a 4 hour basis. And we're seeing some topping action. Now, this weakness on the dollar is helping gold. Gold is moving higher this morning. And in fact, we were in a downtrend, which began back here, let's say last Tuesday. And we've been putting in lower highs and lower lows. Now this morning, we are breaking out above the upper band of resistance. We're up 0.75 of a percentage point this morning. Now, gold is not broken down to a new monthly low, but the gold miners have. So it's kind of a tale of two stories right now. But in the pre-market, gold is looking strong, the dollar looking weak. Let's take a look at yields because they matter. Actually, the 10-year note. And we could divine which way yields are going. All right, so we're seeing a rise in the 10-year Treasury note. That means that we're seeing some pressure on interest rates. That helps gold, silver, and the miners. RSI is beginning to put in higher lows here and very close to higher highs. No breakout yet. So things are beginning to look good for the commodity space, at least in terms of the metals. Let's take a quick look at oil. Oil is bouncing this morning, but still, actually we did break out on a 4-hour basis. So oil is looking better, but still unable to recapture this 20-period moving average. Watch the dollar, folks. And that is it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well.